Hello, it's time to focus on the ECB. This week's meeting of the European Central Bank is arguably the most important in its history, and so far its chief, Mario Draghi, has been incredibly successful in defending the common currency. Do you remember these key words?
There's another message that I want to tell you today, is that within our mandate, the ECB is ready to do whatever it takes to preserve the euro. And believe me, it will be enough.
Well, all the talking could be over and done with now. He might have to bring out the monetary policy weaponry, but will it be just a little pea shoot, or will he bring out the great big bazooka? Well, this is what my guests on London Direct are thinking.
It's all going to be about the size of the package, so the bigger the better, and hopefully the more the euro should be on the back foot.
I expect the ECB will announce some form of quantitative easing, but whether it's impacted or comes into effect in January is more for the question. But I think leaving it till the March meeting is going to be too long for markets. They're expecting something now, and I think anything less will disappoint. But overall, I expect the package could well disappoint in terms of its reach and effectiveness.
So hopefully we get lots of details about whether they're going to be risk sharing or not, how much of each set of government bonds they're going to be buying, and in what sort of proportion, and most importantly, and I can't stress this enough, it's got to be big enough to sort of wow the markets. They need to be in shock and awe mode.
I think we're going to see something big. I think that the reality is that unless they do something big, then we're not going to get the inflation that the ECB want. I think the initial reaction, if we do see something like $1 trillion or $1.5 trillion from the ECB, we see euro squeeze lower. But I actually like buying the euro. I think this is positive for the eurozone. I think if you look at what happened to the US dollar after they finalised their quantitative easing, the dollar recovered. It's good for the economy. You do see a negative effect in the short term, but longer term positional hedge fund traders and money managers should use this as an opportunity to buy the euro.
I have very mixed expectations of Mario Draghi and the potential impact of quantitative easing.
Well, clearly I think the pressure on the ECB is to announce some form of additional stimulus. I think we are going to see details, or at least the outline of a plan to purchase some degree of sovereign bonds being announced. Whether we get the full details, though, I'm not necessarily convinced. We may have to wait until March, but action is going to be forthcoming. But I think we're still going to see a cheaper euro as a consequence.
We feel that the ECB is going to be implementing a form of quantitative easing on Thursday to the circa of about 600 billion euros. The question marks are going to be on the details of this quantitative easing measure, of this quantitative easing plan. Ultimately, he needs to be clear and concise with the marketplace of the ECB's intentions and how far they're willing to go. He does, however, have a habit of disappointing and under-delivering in these press conferences.
One of the things that will potentially delay QA is also the Greek elections that we're going to see on the 25th. As we are probably aware, the opposition party in Greece, Syriza, are looking to restructure the Greek national debt package. So if they do come into power, Mario Draghi is going to have a lot of questions on his hands that needs to be answered from this opposition party. We are seeing deflation in the Eurozone at the moment, and I think the question on everyone's lips is we're going to need to see QE sooner rather than later.
Well, thanks to everyone who contributed to that. If you are trading in the volatile markets after that ECB announcement, make sure you stay safe. But from London, goodbye for now.